Hello and welcome everyone. I am Rachel Dishell, Senior Manager of Trading Services and your host for Trading Price Patterns. This is a class where we build on those basic concepts of technical analysis. We assume that you're familiar with some of those tenets already, and we talk about looking at price formations, price patterns, and we place trades around those price patterns in this class. So if you do have questions, comments, requests today, please enter those in the chat. We have Mike Fairborn in the chat there, ready to answer any questions that I can't get to today. And please give us a follow on X. I am Rachel-CS. He is Mike Fairborn CS. We post a lot of charts that you will see even before this weekly webcast. So please give us a follow there on X. And please like this video and subscribe to us on Trader Talks on Schwab Coaching, our YouTube channel there. Now today, I'm very excited. I hope you are very excited because I have so many different price patterns and charts for us to look at. So we're going to take this class a little bit differently today, fit in more charts, more setups. So I'm excited to dive in with you here. But first, let's talk about those important disclosures here. So options carry a high level of risk and are not suitable for all investors. The information we're going to cover is for general informational, educational purposes only, should not be considered any type of recommendation or advice. And we are going to go through the Paper Money software application. There are some differences between paper and live, so keep that in mind as well. Now, our agenda, just like we do in every class, we start with the market overview, we review our old trades, we find the price patterns, talk through those, and place new trades. So that's what we're going to do today. So let's dive into Think or Swim. Let's start with that market overview. Well, today we are at new all-time highs for the S&P 500. We finally made it to 7,000. Ring the bells, 7,000. There we go. We made it there. We have our short-term support right there at the 20-day moving average around 69.20 or so. Obviously, we have kind of the Fed announcement today. We have earnings announcements out today that may impact the overall direction of the market. So that's kind of on the docket today. Now, since this is a price patterns class, I want to take a little macro view for just a moment to look at a price pattern that is actually forming in the dollar index here. So this is a chart that I know many traders have probably been looking at, especially these last few days, as we've seen that it really has been looking like the dollar index has been trading really in this rectangular range, or what we call box pattern down here at these lows, really from 100 up here at resistance, 96 or so here at support. And this kind of downwind in the dollar that we've seen, we know has given some extra fuel to precious metals, commodities, international markets, things like that. But I want to point out something notable that we're seeing here today. So just as yesterday when we broke support of that rectangular pattern, today it looks like we have both an inside bar where we have the entire bar length from high to low is encompassed in the previous bars range, in addition to it being a possible bullish Harami candlestick formation as well, with this entire green body encased in the previous red body from yesterday. So of course, I think that draws a lot of attention, a lot of eyes to this from a lot of traders who may be looking for a possible follow through tomorrow, which would give traders the indication of that confirmed possible bullish reversal type candlestick formation. But I think it's even more important to note that this is forming at such a crucial level of support here. So that is something that traders will be watching to see if we can get a little bit of fuel, a little bit of strengthening towards the US dollar here. Now, if not, since it is a price pattern, where could we look to the downside for a possible measured move if this break towards up towards old support now new resistance doesn't really hold here? Well, let's zoom out for a minute here and just look at where this could possibly take us. We'll zoom out here. So we have 100 to 96 essentially. So what do we do in this class when we have a rectangular pattern? When we have a pattern, we measure the entire width of that pattern, which we can see is roughly 4 points there. And what do we do? If it breaks through support, we can take that measured move down here, add it to the breakout point, and where does that put us? Right around 92 or so. So that would be the measured move if this dollar index cannot hold some of these long-term levels this week, it looks like. So 92, the level to watch there on that one. I know we also have a rate announcement coming out today, couple levels that you guys may be watching here with the 10-year. We had that support retest here after the breakout with a doji candle here, giving us that possible signal of a pause or possible reversal. We've had a couple higher closes since then with a bounce back into this kind of zone here right above 4.2 or so. So a couple different things to watch here in addition to what we look at overall when looking at the market. But given that, let's move into some of the trades that we are in and have gotten stopped out of. So today we actually got stopped out of ACN. We went long the shares when we saw this cup and handle pattern. We had our stop set at 272.22 right at that low of that previous candle. You guys can see that we got stopped through today. So cut our losses. We are out of that one. Let's take a look at another one here. We had a bear put spread on Dell, just to kind of remind you what that trade was. Let's pull that up here. We were long the 120 puts for the 20th of March, short the 110 puts for March there. Just looking at this breakdown of this massive head and shoulders pattern here. And since then, it looks like we've wanted to creep up a little bit more towards that old neckline resistance here, but yet we still haven't broken that border yet. We are down a few hundred on that position that we placed. But again, we still have a decent amount of time. We still have over a month of time for this to play out. And realistically, if we just look at this downtrend, we have not made a higher high or even a higher low yet here. So this is still something that we're monitoring there as well. Another one for you here, STZ. We know that we entered into this one once we had that break of, or that extra confirmation break there with more than a 2% move above that neckline resistance of our inverse head and shoulders pattern. Right now, I guess our stop, for a reminder, our stop is down here right underneath where the neckline was for that old support. Right now, it looks like price is forming almost like this pennant pattern, triangular pattern, really finding a lot of compression there. And so this is where we may see, if we see that continued move that we saw leading up into this consolidation, we may see that bullish continuation to the upside here on Constellation Brands. So we're still holding on to that one as well. What is another one? We did get stopped out of WSC. We talked about this one a little bit. We had a inverse head and shoulders on this one. We had the left shoulder here, the head, and then the right shoulder. We took a position there right around 2206. It stayed up there for a few days. We had our stop right around 2071. So we got stopped out there on Monday, I believe. Now, reasons why this inverse head and shoulders pattern looks a little bit different from the one that we just saw, why it's a little bit less bullish than the one we just saw on STZ, and I can go back to that one as well. But the reason why is because if we look at the slant of this neckline, that neckline was still making lower highs in that case. Even though we made a higher low from here from the yearly lows, we were still not necessarily making a higher high to really confirm that true change in the trend there. Now, if we go back to STZ, the one that we were looking at before, this one is slightly more bullish because you can see the neckline slants in the opposite direction there, where you have not only the higher low on that right shoulder, but you also have the higher highs being formed on that neckline and with that breakout too. So you guys can kind of see, you'll see flavors of these all around, even the head and shoulders tops, inverse head and shoulders like you see here. They may have that horizontal neckline, but sometimes they're a little bit slanted. So it can give you some more clues as far as just if it's slightly more bearish or more bullish in that particular context there. So hopefully that helps. Okay, we've done our review. Now let's look at some of the different patterns that are stacking up. Now, I did tell you guys in the beginning, we are going to take this class a little bit differently. It's almost going to be kind of like a wait and watch type of scenario. We're looking to be a little bit more disciplined when we're looking through these charts. My goal is to give you guys a list of things to have on a trade watch list and understand what to look for as these patterns are actually forming, because I think that will kind of give you a little bit more tools in your toolbox as far as just when you are building those scans, when you are building your watch list, you know about certain things to look for and maybe some different levels that may help with possible positioning and taking a trade. So let's look at CSX here as the first one. So looking at CSX on the chart, what is the type of pattern that you guys see here? Please throw it in the chat. I want you guys to be very loud there in the chat as far as what you are seeing on this chart, because we may see a few different things. I know our eyes are all very different, so one pattern may show up to one person a little bit differently than another. So put that in the chat there from what you are seeing, and then I will start to draw out some lines from the pattern that I am seeing as well. So I'm seeing some responses, higher highs, higher lows. Yep. We have higher highs, higher lows here. You can connect those higher lows. Okay. And then, yep, I see everyone saying that it is an ascending triangle here. Yes, that is what I am seeing as well. So we have an ascending triangle forming here with the higher lows being made. Remember, with a triangle, you only need 2 touches on the upside, 2 touches on the downside as far as forming this triangular pattern. And then we saw that breakthrough yesterday. And what a lot of traders may be looking for to see if this old resistance, now new support here holds, and they may look for maybe another filter as far as maybe that 2% move that we talk about in this class, or maybe a couple closes above this level to wait for confirmation. But essentially, where could this measured move take us? Well, if we take our highs of the pattern down to the lows of the pattern, that's about a $5.40 move here. So if I just take that and project it to the upside, that could place the target price right above 43 or so. So 43 or so looks like that upside. If a trader is waiting for that confirmation, waiting to take that entry there, they may wait to see if we've made a higher high than we already have in that case. And where may a trader place their stop? Well, they may place the stop a little bit below that neckline support, maybe a percentage point away, maybe 2 percentage points away, or they may look for this level at the edge of the triangle as a place to place their stop as well. Okay, so that one we're going to wait on that one. We're not going to place a trade on this one. Like I said, today's going to be more about identifying these price patterns, maybe making some notes, putting on our watch list, setting alerts, but not necessarily making the move today. So another one I want to look at here is GameStop. So this was another one that actually showed up on the list. I want you guys to tell me, what are we seeing here? What type of pattern are we seeing here in GameStop? I want to see if you guys are seeing the same things that I am. Waiting for you guys to put that in the chat. And yes, Gordon, this began at 1 p.m. Eastern time. This will be recorded, so you guys can actually go back and watch this recording afterwards as well. Okay, awesome. I see everyone putting in a double bottom or a W pattern. I see Paul saying nothing that I want. So funny. So if we look here again, this is going to be one of those we're going to wait on, because it looks like we did have that double bottom pattern here where these lows were formed right around $20 or so. We see that resistance is being formed right here around that $24 level. We did have a breakout above that level, but we didn't see a close above that level. And then today we're seeing a possible bearish engulfing candlestick that is completely engulfing the body of the candle yesterday, which is what those engulfing candlesticks are there. Now, obviously, for that to be confirmed bearish engulfing, we would need to see follow through tomorrow. Now, what could invalidate this bearish engulfing candlestick? Well, a break above the highs of this candlestick would give us that signal that this bearish engulfing has been invalidated. That would also give a breakout from this double bottom pattern, which if we take the depth of this possible pattern, it's about $4. So where could our measured objective lead us to the upside? Well, let's just measure that, do real simple math here. Where could that take us to the upside? Right around 28 or so, which is where we see that other shelf of resistance from those prior highs and then from that gap from June as well. So I have a question on what time frame are we watching. This is a 1-year daily chart on all of these as well. So really good question. A lot of times though, when we do look at these patterns, we take a multiple time frame approach. So a lot of times we may zoom out to take a look at maybe a 10-year weekly, or we may even look at the monthly, depending on our time frame there, or to see the context of where this pattern could possibly be forming, or to even take a look at where these possible support and resistance levels could find themselves on a longer term chart if we should break through yearly highs, yearly lows there. And then when we're coming down to making those intraday decisions, that's where we may take this look at this longer term chart from a 1-year daily. We may piece it down into a 20-day hourly or so to take a look at what these patterns may be looking like on the shorter term and where to take those possible entries. So really good question there. Now, I see another question. What pattern do you have on Galaxy on your list? So I wanted to take a look at that one as far as just kind of a teaching lesson here on this one. So we've looked at this one over past months in this class where we did see this head and shoulders pattern forming, where we saw this neckline really getting crafted out right around $22 or so. Real big head and shoulders. Now, one thing that we did not see with this pattern, which is why it is so important to just sometimes just be patient, just wait, is that we didn't see any confirmation of a breakdown from this pattern. So I want you guys to notice that. we didn't see this breakdown of support whatsoever. That support line held in there strong and gave us this reversal. So that is why we wait for confirmation on these patterns, because topping patterns like a head and shoulders pattern like this, topping patterns that do not break down, actually end up being continuation patterns that continue in the direction of the underlying trend, which has been up for the year. So I want you guys to keep that in mind. That's why we wait for a 2% break, for instance, as an example, below that, to then take a bearish trade in that example. But here we saw an immediate pivot. We saw that this shelf of support from the right shoulder has been held. And right now, I thought it was interesting that right now it's forming almost this flag pattern or pennant pattern that we are seeing here too. So we have a flagpole of roughly $10 or so. We have a few days of consolidation. And where could this possible bullish continuation pattern lead us? Well, let's take that flagpole. Let's put it right at the possible breakout point. And that could give us that upside target close to $43, $44 or so to the upside with that. Okay. And okay, I'm seeing a few different questions here. Yep, it looks like that. So yeah, let's take a look at NVIDIA. I know one of you guys mentioned NVIDIA there in the chat, mentioned it seems to be doing a similar thing. Let's take a look at that one as well. So this has been forming a head and shoulders pattern here, a possible head and shoulders pattern, I should say, with the left shoulder here, the head right here, and the right shoulder, possible right shoulder getting crafted out right now. And this neckline that we see here is slanted a little bit up. So can you guys tell me, just from the head and shoulders patterns that we've reviewed so far, I want you guys to throw in the chat and tell me why this one in particular on NVIDIA is just slightly less of a bearish head and shoulders pattern. So why is this a slightly less of a bearish head and shoulders pattern on this one? I'll give you guys a minute to respond in the chat. We talked about this one already. Yep, now I see. Awesome. I see your responses coming through now, because we have that uptrended neckline where even though these lows, these pullbacks to these lows were made at support, they are still making higher lows in that case. So in this sense, a trader in this type of position may look down one time frame further and see where there may be levels of support or resistance, in this case with this right shoulder. And it looks like if we zoom in a little bit further, I'll kind of show you here, there may be this neckline of resistance right around this level that we are hovering over right now, right above 193 or so. So I think that's going to be, in the short term, what traders will be watching to see if NVIDIA hits its head on that short-term level of resistance. And if it does, it may look to find these lows on the downside, or even these lows from that possible head and shoulders pattern here. And you guys can see that is the measured move to the downside. But again, on this trade, if we were bullish or bearish, I should say, in this scenario, a trader will typically look for confirmation with a decisive move below that neckline. And how may that trader play out that particular bias as far as being bearish in this sense? Well, they may, if they want to use the options market, which a lot of folks may, if they don't want to take a short position, they may look at maybe selling a call spread in that case. They may look at buying a bear put spread in that case, or they may look at levels of volatility and see whether it makes sense to possibly buy a put option in that case to really utilize that bearish bias there in that case. So there's another one for you guys there. Now let's look at a few other ones. So had another one that popped up on the list, Procter and Gamble here, which I think this one is interesting, especially with that short-term strength that we've seen in staples here. Procter and Gamble looks like it is forming this W pattern, which some of you may call it, or this double bottom pattern in this case. And right now it looks like it's pulling back to that area of old resistance, now new support. So I'm going to zoom in so you guys can take a better look at this one. Okay. So what we may be looking at here, of course, we'll talk about waiting for confirmation and waiting for a possible bounce or a move above that level, but let's just take a look at what that measured move may look like. So if I take the entire depth of that pattern from old resistance, new support, down to the lows of the pattern, project that upward, that would place us right around 158, 159 or so. Okay, so I'm going to mark that there. Now, you may be asking, well, what will we be looking at as far as giving us a confirmed move above this level of previous support? Well, something we may be looking for is a close above the high of this low day. So the high of this low day is 148.71. So I'm going to draw that right here. 148.71. So if we are a trader that thinks that this breakout will hold, we may want to trade this pattern, take a long position here, whether it is a long call, whether it is a bull call spread, maybe it's a bull put spread in that case. However you want to express that bullish thesis, a trader is going to look for confirmation, whether it's multiple closes above this level of support, a move above the high of the low day, or maybe it's that percentage move that we talked about as well, where we can just say, okay, we want to wait till we're again another 2% above that level. And where may a trader possibly place their stop? Well, they may place it right below maybe a percentage point or two below that level of support. They may even be looking as far as this latest pullback within that uptrend towards the neckline as a level to mitigate risk as well. So a couple different things that you could look at there. This one, we are going to take an example trade on this one today. We're going to use a buy stop order on the entry to say if price is above the high of this low day, we're going to take an entry and we're going to place a stop there to the downside and our target to the upside. So what am I going to do here? I'm going to click on this, go to buy custom with OCO bracket, and let's change this first one to a buy stop. So we are going to place an order to buy this if the price is above 148.71. We're going to make these all good till canceled. So again, just a reminder with stop orders, there is no guarantee on where this order is going to get filled. It just says that when the price is 148.71, we are going to send a market order upon entry there. To the upside, we are looking at 158.70. And to the downside, let's look at that level of 143.65. 143.65. Okay. Now, how many shares can we place? Well, let's just remember that this is an account where we don't want to risk more than 5% of our account in the trade. So that gives us $10,000. Now you guys can always use these little buttons here to say, I want to buy $10,000 worth of XYZ. And then that's going to create an order to sell whatever percent of your position. In this case, I'm just going to do the math and take 10,000 divided by our entry, which is 148.71. And that's going to give me about 67 shares there. Okay. So 67 shares. Now I'm going to hit confirm and send here on this one. Again, that's 10 points to the upside for our possible reward, 5 points to the downside. That is a 2-to-1 reward to risk there in this scenario. We're going to place this in our price patterns class there. Everything looks okay to me. We are just double checking this order on the downside, and we're going to hit send there. Okay. We have one trade in. More charts to look at, you guys. How are you feeling so far? If you're ready for some more, let me know. So the next one we're going to look at is KTOS, so Kratos Defense. Hopefully I'm pronouncing that right. We saw this bowl-shaped pattern, which technically what this is it's just essentially that cup and handle shaped pattern without the handle. So it is essentially first this distribution, then you have this bottoming formation, which is a essentially a possible accumulation pattern for that stock. Then you have that markup phase, which is that strong uptrend, that break of resistance here. And then, excuse me. And then you have a retest of support in this case, which we don't always get that retest of support, but in this case we did. And one interesting thing that we saw, which could give traders a little bit of confirmation, especially with the price action that we saw yesterday, is this close above the high of the low day. So this was the low day. This was the high right here around 113.66. And we closed above that yesterday, and we still pushed higher on that today. So this may be one of those where we can say, hey, this may give me a chance to possibly enter in onto this trade with a risk-defined entry with our stop possibly right there, right below that previous low, right there below support. So we're going to do that. We are going to buy this on a pullback, what we say buy the dip, and use this as a trade as well. So I'm going to go to buy custom. I'm going to use this custom template that I set up here with our $10,000 trade. We are going to look to buy this at the current price right now, and we're going to place our stop. I'm going to zoom into this a little bit more. We're going to place our stop right below this low. So if I'm going to hover over this, I'm going to draw where this low is here. Okay, so that low is at 106.77. So sometimes what you'll see, if price does swing back to that low, you may see that price may find that value again around 106. But if it's going to sustain that trend, if it's going to hold that level of support, typically you'll see it hold that whole number. So you'll typically see it hold that 106. So what we're going to do is actually place our stop at 106 right here, right below that low by 77 cents in that case. We're going to leave our upside uncapped there, but our downside risk we know is about $7 per share there in that case. And we are going to look at this one and hit confirm and send on this one. Okay, so we are buying $10,000 worth. We're going to sell 100% of the position. We're going to put this in our price patterns. Okay. So that was essentially a trigger, and it does the math for us here. Okay. So we have that one in there and working as well. We still have a little bit more time to go through some more. I wanted to give you guys another look at something to pay attention to as well. So when you have a run up for a stock like this, for Gilead Sciences. We're going to use this one as this example. So obviously there has been a very steep run up the last few days on this particular name. You can see if we just connect lows from this first big bullish candle up to the highs, that is over a 15% move. That is a $19 run just in the matter of 6 trading days. So 6 trading days in that case. Now, how could something like this, how could you find a pattern like this on your possible scan? And I'll talk about why. You could just plug in a study filter for price performance, and you could say, I'm looking for a 10% move in the last 7 bars, or a 10% move in the last 10 days. And the reason why I'm giving you this as an example or an idea to put into a possible scan is because this allows you to put a possible bull flag type of pattern on your watch list. Now, there's no guarantee that this is going to form a bull flag pattern, but I'm telling you this is because this is something that I found that has worked for me as a technician as well when just looking to build some of these on a pattern watch list. Because I know a lot of you guys just kind of ask, where do you find all these patterns? How do you build some of these watch lists? And this is one idea. Now, there's no guarantee that this is going to pull back a certain extent of this move. But we know that with flag patterns or with pennant patterns, they are typically a very steep ascent going into that initial move. So that this is kind of giving you that first item on what to look for in the very early signs of a possible type of flag or pennant pattern here. And today you're seeing the start of some possible indecision. You got a little start of a doji candle here, which may be saying that, okay, with this $19 move, Gilead may be needing to take a little bit of a breather. So where could we see a possible pullback in this trend where it could still be considered a possible flag pattern? Well, I just took these Fibonacci retracements from the lows to the highs. If we do have a retracement that's less than this amount, so if we have a retracement that doesn't retrace more than 134, typically it doesn't retrace more than that type of move, then that is typically where we can look to see, okay, is there going to be a few days or maybe a week or so of some possible consolidation, a possible pullback to give us maybe some indication that this could be a possible bullish continuation pattern. Again, we don't know that this is going to be a flag pattern by any means. This is just kind of giving you guys something to look for, which is those steep moves to the upside with a possible consolidation coming. But of course, the consolidation and then the breakout above that possible flag, again, is going to be something that you're going to look for as a pattern trader there. And I do see a couple questions here. Paul put a good comment in the chat. Yes, I drew those Fibonacci's because typically with flag patterns and pennant patterns, you're not going to see a pullback more than a third. And you definitely won't see a pullback more than half of that initial move. So that's why traders, in this sense, with these steep moves to the upside, they may use those Fibonacci retracement tools to just take that low of the initial move to the high of that move, and they may look for these areas where price may pull back to in that sense. And yes, this is the Fibonacci retracement tool. So that's just essentially just taking various ratios that are found nature, science, art all over and applying that to the markets as well. So let's see, another question. How did you set up the customized buy order with $10,000 with a stop limit? Great question there, actually. So This will help save you time if you guys want to set up some of these custom orders. So if you just go to the price of the stock, go to buy custom, and maybe you want to do this with a stop limit, let's say. And let's just say you want to use this in a dollar value on the entry, like I did here. So you can take a dollar value on the entry. You can see that the sell order, you can actually change that to a percentage there, and it will just show we're selling 100% of that position, whatever that may be, because this is essentially on the entry with using dollar values is a trigger. So it's going to do the math for you. And so if you want to save this as a template or any of these other things like your time in force, the type of order that you have to the upside or the downside, this is where you're going to click on this button that says Save Custom Order Template. You're going to come here. You can name this as your own template. But once you do, it's going to save at the top here when you go to Buy Custom or Sell Custom. So you'll actually see it as a custom template there. So hopefully that helps. Couple minutes left here. I do have a couple more charts for you guys, believe it or not. Okay. So another one that we are watching here is MasterCard. This is a massive head and shoulders pattern. I think we've talked about this one on this class before, this webcast before. We are not yet quite seeing a 2% move below that neckline support, but if we did, it would probably be around 514 or so. So that's probably the level we'll be watching there. Where could our downside target possibly be on this one? Well, let's just take a look. That is a $76 move on that measured move from the highs to the lows. Of course, these patterns, they're not guarantees, but just keep in mind that this is typically how price is symmetrical through both time and price here. So you can see a measured move to the downside is roughly $76. This pattern took 9 months roughly to form. So the symmetrical nature of markets may say that, hey, it may take, if we do see a move to the downside, a decisive break, it may take about 9 months to reach that level. But of course, you're going to run into those yearly lows as support, probably right around there first. And where could a trader possibly use this as a bearish strategy? Well, you may want to look at the levels of implied volatility, see if they're relatively high or relatively low. If they're a little bit higher, you may want to utilize a spread. So you may say, we may sell a call spread at this level of resistance. You may buy a put spread. Or if volatility is a little bit lower, if it's more of a enticing environment for being a buyer of options, you may play this with buying a long put directionally to the downside as well. So couple different things to think about there. Couple last ones. We do have a cup and handle pattern on Alaska Air with the neckline right above 54. Take that measured move with the depth of the cup, project that upward. You're probably looking at this area right around here as measured move resistance. Again, no guarantees on that one. What else? Kinder Morgan with a breakout of this bull pennant pattern today. We can see the move off of that one with a flag pull of roughly $3. We can see a breakout of that today as well. Well, guys, we are at time. We just ran so quick through all these patterns. This has been something that you guys have been asking for within the survey. Trust me, I am reading all of your results, your comments, your requests. So I appreciate all of you guys today. Of course, this episode will be recorded, so you can go back and watch it for later. But I want to thank you all in the chat for your questions, comments. Thank you to Mike Fairborn for helping us out as well. Please give us both a follow on X, Rachel-CS, Mike Fairborn CS. Please give a like to this video if you enjoyed this discussion today, and please subscribe to us on Trader Talk Schwab Coaching on YouTube. Thank you, everyone, and see you later, traders.